Wagner here, just before 10:30 in Honolulu, 4:30 in New York on Wednesday, October 23rd, 2013, and this is the daily report for gold and silver. We do have lower pricing, moderately lower pricing across the board. First to gold, 1333.30. That's our current screen print. Puts it off between $5 and $6 on the day. Silver also trading moderately lower, off about a dime on the day, 22.58 as you can see on the screen. The low 22.42, high 22.85. High in gold 1341.90 and the low 29.30. We did recommend going long in both gold and silver, and we'll discuss that in detail all on today's daily report. We sent out a trade alert this morning recommending going long in both gold and silver. Wanted to spend a moment talking about the trade itself, the strategy behind it, our exit targets and our stop targets, and basically the theory behind what we were looking at. In essence, we've been talking about the fact that we had a true breakout above what was formerly our resistance line, and it was simply based on these tops and extending the line down. And what we noticed is that as this market came up off of these lows being about 1250, they have been doing so kind of in a stair-step manner. Now, we are looking at a half-a-day candlestick chart. And really, what I have noticed just in terms of the way that this market has been trending higher is it's been really characteristic in terms of strong moves to the upside, period of consolidation or sideways action, followed by another spike to the upside, consolidation. We got that spike yesterday, of course, and today it's trading off a little bit. You can see these two candles represent today, so we're getting this sideways action again. My sense is that we'll get some sideways action, and that should be followed by higher pricing. Now, we will spend some time going over our upside targets, but most importantly, want to talk to you about the stop first. I am recommending that we place our stop below 1309, and the rationale behind that is 1309, putting it below, puts it below these series of lows on our half-a-day candle. But if the market is going to continue to trend higher and continue in the same pattern, it's going to be characterized by spikes, kind of sideways, and then a spike again. If we're truly in that sideways point, we should see this market trade sideways before moving higher later on, either today or tomorrow. Now, in terms of our strategy and our upside target, the first thing that we want to take a look at is we do have our stop below 1309, and we explained why that is. But really, I'd like to see it be able to hold the 1330 area. And one of the reasons that that area is kind of important to me is we have a series of different Fibonacci retracements or different time periods, 50% 1330, 23% 1329. So we have a small cluster, small harmonics right here, and this should provide some pretty eloquent support for us in this area. Now, our next upside target that I want to see it take out on a closing basis, and that's based on this smaller fib retracement, which is just simply from this last rally being about what, 1181, 1435, and then we have this decline right in here, and the decline right here is where I've got this sidebar. And so 1340 is the next area I want to see it take out on a closing basis. And then I really believe that it has pretty much clear sailing till around 1370, with the upper level being at about 1389, 1390, and that's this 76% retracement of this short-term corrective action here. Yet another way to look at different resistance levels and therefore different targets that we'll have for this given trade. Weekly chart, this is the December contract of COMEX Gold, 1 fib retracement. The retracement is from this entire rally, 1180 up to 1435. Major support, 1306, or stop us below that. 1336, 38% retracement level. Again, like to see on a closing basis the market move above that. And this is really our target, which is 1373 to 1375. And that's a 23% retracement of this entire move here. Now, there's no doubt we absolutely didn't pick the bottom on this particular trade. When we take a look at this daily chart in Japanese average format, what we are noticing is body size is still strong, good body size in terms of the market move. Even on a down day, the Japanese average chart is going to stay green because it's comparing it to the midpoint of the prior day on this type of candle chart. And what's important is we have the lack of our lower wicks or tails. That's significant. Body size is strong. So we still see this trend intact. Now, another way to look at certain resistance areas is simply to look at some of the tops in the market. You have this top up here, which is roughly 58. Then you have another top up here, which is roughly 70, call it 80 to 78. And it's this top of this body, which is where our particular current target is to exit the trade. As I said, roughly 1373. Now, traders, as far as silver goes, I did recommend entering a long position in silver. We have a very, very similar formation. When we look at this market, we've got this strong uptrend that has been developing over this last week or so, or last 5 trading days. We're roughly in this area. And in terms of our absolute target, I think we could see 23.25 in terms of an upside target, our initial target on this trade. But probably the best way to look at this trade in terms of upside targets, I put in a basic fib retracement. This fib retracement is this move from $25 back down to $20, this corrective action here. You can see that we're currently up against some resistance at 22.78. That happens to be the high. And as you can see, my initial target is going to be roughly 23.34, with the potential in terms of the absolute most I think we'll probably see out of this trade just prior or just short of $24 an ounce. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.